When is, in your opinion, the ideal time to purchase Tesla stock? For several months now, Tesla stock has been below analyst projections. Nevertheless, due to Tesla stock's poor performance in the market, some investors have been buying up shares while others have been rushing to sell their holdings. It would be unwise for you to miss this. Star investor Cathie Wood has been buying up Tesla shares despite the company's stock declines during the course of the previous year, including in January. Even her investing firm, ARK Invest, has been buying Tesla shares every time the stock hits a record low, giving the impression that she is on a dip buying binge. For example, Cathie Wood thinks that the current decrease in Tesla's stock price is a purchasing opportunity. Wood's conviction is even echoed by more analysts. Given this, Tesla stock is still declining after a difficult year, giving investors opportunities to purchase. In a recent interview, Mark Newton, head of technical strategy at Fundstrat Global, stated that even though Tesla is trading at a level that might not be in line with its fundamentals, buying opportunities would still arise. Newton thinks Tesla is a good firm, but other investors have lost faith in the stock because of the market's volatility and a few other factors. As Newton stated in his early January appearance on CNBC, despite Tesla stock closing at about $113 per share in the first week of January, falling further the next day, and opening with a steep 5.7% dip the day after that, he thinks there may be a buying opportunity. When Tesla stock gets down near $100, for me, by the end of the month, there will be some things that will line up that suggest the stock is a trading buy, and it could have a very sharp bounce, he stated. Newton appears to think that some investors may decide not to sell their stakes after Tesla's earnings call at the end of the month. By Tesla's earnings, by the end of the month, there's going to be some opportunity, I believe he stated. Mark Newton, managing director of Fundstrat and market technician, told Yahoo Finance a few days following the aforementioned CNBC interview -5. Officially, Tesla is now oversold. Just before Tesla's earnings are announced, at the end of the month, I'm looking down under 100, and that's when many of my own cycles begin to indicate that a bottom may be possible. We might hit rock bottom and begin to recover around springtime, Newton continued. Following a 65% decline in the EV maker's shares during the previous year, the stock has significantly increased by 10% thus far in 2023. Analysts are certain that the spectacular decline in Tesla's once invincible stock price is caused by a number of causes. First off, with Elon Musk. Concentrating on Twitter, his newest venture, the possibility of operational blunders at Tesla has increased. Second, with COVID-19 regulations still up in the air, worries about production problems and the rate of Tesla sales in China persist. Finally, given the level of competition in the US EV market this year, there is a greater chance that Tesla's growth may slow down in 2023 and beyond. While these worries remain prevalent, some people on the street are starting to get more comfortable with Tesla stocks. In a recent letter to clients, Citi analyst Itai Micheli stated, "We think the Q4 setup is improving, echoing Fundstrat's Newton. We don't think Q4 numbers alone are likely to overcome the legitimate unfavorable factors that have sparked the recent sell-off, such as market share, December China demands, and other worries. Nevertheless, we believe that the declining mood also reflects a lack of clarity on important future issues such as the 2023 auto gross margin bridge, the cost-benefit ratio, the delivery production projection, and the product cadence for new or updated cars." In response, the Q4 results and the Investor Day on March 1st may offer much-needed clarity and support on these issues, and by themselves, they may be able to. Temporarily improved mood other businesses are likewise shifting their opinions about Tesla. In the first week of January, Edward Jones upgraded its hold rating on Tesla shares to a buy. In a note to investors, analyst Jeff Window stated, "We believe Tesla's new product launches will allow it to take advantage of this expanding market in our opinion. The share price of Tesla does not reflect its long-term growth opportunities." The analyst noted that worries about slowing economic growth and Elon Musk's time spent running Twitter contributed to Tesla's stock prices falling sharply during the previous year. Emissions are what are propelling the adoption of electric vehicles, EVs, even though slowing economic growth may put pressure on short-term auto sales, according to experts covering Musk. We expect Tesla to continue to have a significant presence in global markets, even though competition is rising. Although Tesla's management team is capable of carrying out the company's present operational plans, many feel that Tesla would gain from Musk's departure from Twitter. New goods and innovations in technology should also increase profitability. Software-based or subscription-based programs like fully autonomous driving are particularly significant for Tesla because they are anticipated to yield higher profits. Tesla is also aiming to lower expenses and increase manufacturing efficiency. In particular, continuous battery design advancements ought to lower expenses and boost profitability. The analyst continued, Window expressed their conviction that Tesla will be able to capitalize on this growing market with the introduction of additional products. We believe that Tesla's long-term growth prospects are not reflected in the share price. In a note to clients, Windows stated that Tesla stock looked affordable given the company's potential for long-term growth. Tesla has above-average price movement both up and down relative to the market, due in part to shifts in investor views about the future of the company, which depends on growth in the EV market, Tesla maintaining significant market share in EVs, and the success of new business ventures. Window wrote, Alongside the automaker's EV batteries, he also predicted that Tesla's full self-driving FSD beta will keep getting better. Furthermore, Window mentioned that Tesla intends to introduce new goods this year, such as the Cybertruck, and that a revised Model 3 design may be released later. In the year, Window acknowledges the stock movement this year has been eye-catching. Nevertheless, Tesla maintaining significant market share, EVs, and the success of new business ventures are ultimately dependent on investor sentiment. Due to notable changes in the opinions of investors, Tesla's price movement has been above average in comparison to the market. Investors shouldn't place bets on Tesla stock rising in the foreseeable future. According to Fundstrat global stock strategist Mark Newton, who believes the company has broken down, Newton stated, "The stock has clearly broken down" in a recent CNBC interview. For immediate-term investors, we have to rise almost above the area where it was broken to really think that we are going to start a big rally. It began to decline in November with a share price of about $206. Getting back to those levels would mean nearly doubling the current stock price, Newton stated, and investors really can't do things that way. It coincides with a dismal fourth quarter for Tesla, during which the company's stock fell 60% in less than 4 months and its market value was wiped out, amounting to $700 billion. The manufacturer of electric vehicles failed to meet its third quarter earnings and delivery and production goals. However, Elon Musk, the CEO of Tesla, who sold his company to pay for its $44 billion acquisition, was mostly responsible for the decrease. Investors in Tesla are quite uneasy about Musk's Twitter endeavors. Some are calling for him to leave the social media giant as he comes under increasing fire for his political memes and tweets, as well as his leadership style. Since the company went public in 2010, it has undergone the most savage sell-off to date. Analysts suggest that Musk's announcement that he will stand down as Twitter CEO upon the appointment of a suitable successor could be positive for Tesla shares, albeit a significant increase is unlikely in the immediate future. Newton stated that the stock had only begun to decline 2 months prior, indicating that the fundamentals remained weak. The greatest mistake made by Wall Streeters is believing that it is always wise to purchase dips when an asset is down 50%. If 2022 has taught us anything, it's that bear markets aren't always conducive to successful investing. He continued, there could be a very steep rise, but I think it's too early to be thinking about that level here. Newton stated that although there is still a short-term downside, investors may have a buying chance when Tesla reports its fourth quarter profits at the end of the month. He continued by saying that there might be opportunity for a 30% to 50% recovery if the price dropped 10% through January. For more, subscribe to this channel.